So here are three stocks I'm buying in November to add to my 400k portfolio, all by working a regular job. Hi, I'm Ace and I built a 400k plus portfolio in just under 5 years in my early 20s by using Buffett's value principles and studying the 18-year cycle. And these are the three names that I'm adding in November. Stock number one, TSM. Now, TSM is the top chip manufacturer for the biggest companies like Apple, Nvidia, and AMD. Now, currently it's trading around $220, up about 45% compared to a year ago. Now, their Q2 in 2025 was record breaking. Revenue soared 39% year over year to $30 billion, and net profit jumped 61% on AI chip demand. Now, TSM also hit a record 70% global market share, and going forward, analysts do see a very bullish case as Apple, Nvidia, and AMD lean harder on TSM chips. Now, financially, they are a machine. They have a PE ratio of only 26, a net margin of around 43%, which is extraordinary. Now, if AI is the gold rush, TSMC is the shovel seller. Stock number two, Lululemon. Now, Lululemon is currently trading around $200 today, down about 60% from its peak. Now, Q1 in 2025, we see revenue growing about 78% to $2.4 billion, with international sales remain still the growth engine, while the new tariff and slowed revenue growth has created some risk and resulted in a crash in price as we see. Now, so overall, a good stock to me with great cash flow. However, I do believe that it's been oversold from its slowdown in revenue growth, and the matrix do give me some margin of safety and assurance. So if consumer spending does stabilize, Lululemon could have a comeback that most people won't see coming. Now, stock number three, Lenner or LEN. Now, currently, Lenner is standing at around $130 in price, and it's roughly down 20% compared to 1 year ago, dragged by affordability and interest rates increase initially. But the new quarter has shown continued dividends, buybacks, and the company is positioning with all the land banking so they can sprint up as demand and also interest rates being dropped. Yeah. So overall, the US housing shortage is still Lenner's biggest long-term catalyst. And when you look at the matrix, they are classic value setups. Also, at this late stage in the cycle, housing is where expansions actually focus on, so Lenner is actually the perfect housing stock. However, as we are late in the cycle, I'm very cautious on sizing and buying more stocks. But if I do have to, this is the one name that I want to buy before affordability and actually interest rates actually go down. Well, there you have it. If you want the full breakdown of my stock picks and how I actually time them with my 18-year cycle, I share all of this information in my free newsletter, link in bio. A question, which one would you add in November? TSMC, Lululemon, or Lenner? Comment down below, I'll be reading every single one.